I mean, I think over the next 5 years, we should actually be publishing an updated Tesla price target very soon. But if you look at our 2026 forecast, it would suggest that Tesla's price could top, $1,000 per share by 2026. So that's up from roughly 200 today. So again, I think autonomous driving as a whole could be a multi-trillion-dollar opportunity over the next 5 years. So even getting a small share of that market would be extremely meaningful for a player like Tesla. And we really see them as in the lead here. If you could invest some money in Tesla sheds right now, how much would you be willing to bet on the car company? Tesla has made the biggest innovations in the electric auto industry, with many more on the way. The car company plans to not only manufacture more incredible products, but to do so while making these products as cost-effective as possible. So maybe truly Tesla is on track to become the largest automaker on Earth by sales in 2026 or 2027. After considering Tesla's future outlook with its current valuations, investors may want to upgrade that investment rating on Tesla from a hold to probably a buy. And here's why. Hey everyone, welcome back to Tesla Tomorrow. Tesla has a good market share in the fast-growing EV industry. Even as more companies enter the market, the car company has maintained its market share over the years, and it could be expected that it will dominate even more shares as the industry continues to expand, unlike some other EV companies that struggle to keep up with their profitability. Tesla has proven to be a highly profitable business, making its stock a good investment to hold for the long term. Tesla has refined what it means to be an automaker. In addition to popularizing electric cars, the company bypassed dealerships to pursue a direct-to-consumer sales strategy and ignored traditional advertising in favor of media coverage and word-of-mouth marketing. These risks have somehow paid off and are now taking Tesla to a much bigger position. Tesla has built a premium brand image that inspires consumer demand. Furthermore, it has achieved that success while eliminating expenses that legacy automakers take for granted. The average price target for Tesla stock for the next 12 months is around $218.95 a share, with the highest prediction setting up at 430.33 and the lowest at 33.33. In North America, the average monthly expense per person is about $3,000. By adding the cost of other miscellaneous expenses like travel and healthcare, we can round that up to $5,000 a month, which equals about $60,000 a year. Therefore, to live comfortably for the next 33 years, you will require about $2 million. This means that by 2027, your total Tesla shares should be worth this amount. So judging by the company's current valuation, is Tesla the right stock to pick for retirement? Well, probably not. But first, let's consider a few reasons why Tesla will be doing so well in the coming years before we start. If you like this type of content, hit the like button. Subscribe and turn on notifications to keep up to date on everything going on with Tesla. Two near-term catalysts that investors have got to watch out for are stronger than expected vehicle demand, as indicated by deliveries, and better than expected profitability at the gross margin level. There are a number of factors supporting the positive long and mid-term financial outlook for Tesla. First, the penetration rate of electric vehicles might increase at a much faster pace than what the market is currently expecting. A research report published last year by Needham & Company highlighted that the majority of automakers are targeting 100% of sales weighted to EVs by 2030 or 2035. It was also noted that various industry forecasts point to U.S. EV penetration rates only hitting the mid-40s to mid-50s when it comes to percentage point ranges by 2030. In other words, analysts may be overly cautious in relation to their estimates of the expected penetration rate of EVs in the future, and that could mean positive surprises ahead, which will benefit market leader Tesla likewise. Tesla's future top-line expansion isn't just about executing more one-off vehicle sales. It is noteworthy that revenue derived from Tesla's services and its other businesses has surged significantly over the years, and looking forward, there's still a lot of growth to be achieved. For instance, Tesla's supercharging revenue is an area that holds significant growth potential, according to a Goldman Sachs research report. The incremental supercharging revenue opportunity could be $1 to $3 billion in a few years. If Tesla opens up the supercharger network to all EV drivers, it is expected that Tesla's future earnings per share or bottom line will grow fast, if not faster than its revenue, considering the positive effects of operation leveraging and potential shareholder capital return. In the third quarter of 2022, Tesla's operating costs increased by a mere 2.3% year over year, as compared to the recent 55.9% jump in the company's revenue. This is a good illustration of how Tesla benefits from positive $20.69 billion in 2023 and is also expected to show an annual growth rate of 3.97, resulting in a projected market volume of $19 billion by 2027. Foreign Stanley analysts see an attractive entry point for Tesla as the stock continues to trade higher. The firm had previously cut its price target to $250 from the prior $330 price per share for a better case scenario where Tesla is unable to meet up with expected EV demands in the future, although it reiterated an overweight rating on Tesla stock. Morgan Stanley analyst Adam Jones believes that Tesla can thrive in the competitive EV market. He said that players who are self-funded with demonstrated scale and relatively low costs throughout the supply chain, like Tesla, can be relative winners in the EV space. Tesla has grown fourfold in 4 years. Assuming that the car company continues to grow at this rate, we will probably see the stock price reach around $1,000 per share after the year 2027. In 2022, Morgan Stanley analysts predicted that Tesla revenue would top $300 billion and surpass the combined revenue of both Ford and General Motors within 5 years. They stated that while most auto investors struggle with the idea that Tesla could be even bigger than either GM or Ford, they expect Tesla revenue to be larger than that of both companies combined by 2027. Morgan Stanley expects these Tesla competitors to see marginal growth share declines that are in turn scooped up by Tesla, for instance, as Ford's market share per unit potentially declines from 12.5% to nearly 10% by 2030, combined with an estimated 2.5% decline in unit share for GM from 14.6% to under 12%. Tesla could grow its wallet share to 23% by the end of the decade. Furthermore, Morgan Stanley expects Tesla to surpass GM's share of new car sales revenue by late 2026 and top both Ford and GM combined by 2030 at $300 billion. It was noted that while both Ford and GM can remain relevant in the EV ecosystem by adjusting to be smaller and less profitable, downside risks for the legacy auto manufacturers could include material and labor cost inflation, as well as executing future EV model launches and effectively scaling production, although Tesla shares have underperformed in the past few months looking beyond the near-term headwinds. Tesla is expected to stay as a fast-growing company in the next 5 years based on the future compound annual growth rate for its key financial metrics. Also, Tesla's valuations have returned to reasonably appealing levels following the surge in its stock price earlier this year. Investors fear this could be centered around market conditions such as Tesla's ability to maintain a healthy price of vehicle sales in a challenging economic environment in the next 5 years. Tesla will continue to be a fast grower in terms of the expected compound annual growth rate for its top-line net profit and free cash flow. Do you think buying Tesla shares is the right investment for retirement? Let us know your thoughts down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to over the last few days, go ahead and click on the next video on your screen. See you there.